focusing on the PGM financial market. Talking about the financial trading of PGM, actually last year, Guangzhou Futures Exchange has announced their plan to develop the futures contract for PGM. So what will be the progress in this regard? And this year, we have invited Chen Xuanchen from Guangzhou Futures Exchange to talk about the progress. Distinguished guests, ladies and gentlemen from online and offline, with us, I am Chen Xuanchen from Guangzhou Futures Exchange Commodities Department, and it is a great pleasure to come here at China PGM Market Summit. And today I'm going to talk about how futures market is going to safeguard the high quality development of PGM. So before I start, I'd like to talk a little bit about my organization. So Guangzhou Futures Exchange is one of the 5 futures exchange under the guidance of CSRC, and we are very young. We were established in April 2021. We have 4 pillars to our strategy. We would serve the green development, serve the Greater Bay Area involving Hong Kong, Guangdong, and Macau. We would also serve Belt and Road initiative. So our main business will focus on developing the futures product, and we have already got the approval from CSRC. In the next 2 years, we're going to launch 16 products. Actually, last year, on the 22nd of December 2022, we have already launched the industrial silicon. So the first bigger category of the product will be green development. So this is a major category of the products, which include carbon emission rights, the electricity futures, as well as the industrial silicon, polysilicon that serves solar power, as well as the rare earth, platinum and palladium for also green energy. So in terms of commodities indexed, we have CSR commodity index, energy and chemical futures index, feed futures index, and steel mill profit index. And the third category of products will be the interlinked products. Namely, we are going to link to other major products in the global market so that the domestic traders are able to trade the global futures product. And the fourth category of the product will be focusing on the Belt and Road and the Greater Bay Area development, including some of the very specialty products like indica rice, sorghum, and coffee. Then let's get back to the topic at hand. So I would be talking about the basic functions and responsibilities, how we serve the development of PGM industry. And the second part, I'll be talking about our draft plan for the futures contract for platinum palladium. And the third part, I will be talking about the plans, the work plans in this regard. And I would want to start with the basic functions of a futures contract. I think in the audience, there must be people who are not very familiar with this concept. So I would start with the concept of futures. So futures is a standard contract that would stimulate the time, the location, and the price of the delivery of the underlying asset. So this is, you can understand it as a futures contract or a forward contract. So you would know what it means. For example, you sign a contract with your supplier for delivering a certain type of products at a certain amount at a certain price in the future time. Every single term will be written in the contract. And the futures is a kind of a standardized contract. So all the terms, including the location, the time, and the quality and grade and specs of the underlying asset, will be standardized, will be stipulated by the futures exchange. So the standardization will totally boost the power of circulation of this contract. So if it is simply an industrial contract between you and your supplier, you cannot simply cancel this contract unilaterally. But if in the futures exchange you don't want to execute the contract, you can sell aloud, or you can transfer it, and there are many ways you can do to get rid of it. So this is a simple definition of the futures, so you can understand it as a standardized contract. So on the left-hand side, you are able to see a standardized futures contract. It's called Platinum 2307, which means the product is platinum and it will be delivered in July 2023. So this is a basic overview of the futures contract. Then there will be three basic actions you can do in the exchange. It's open the position and liquidation and delivery. For example, if a producer want to avoid the risk of the price drop, so in January this month, he would sell maybe 6 contracts or 6 kg of platinum 2307. In this action, we would say it's opening a short position. Then when it comes to July, which is a delivery month, the producer have two options. The first thing is to do a reverse action, which is to offset this position. Namely, he can buy in 6 lots of the contract. So this is basically offset, since in January he short the 6 lots, and this is what we call the liquidation. And over 90% of the people would liquidify their option, but the remaining 10% would choose delivery. So if I choose this option, then the producer need to provide 6 kg of platinum, meaning that meets the demand and meets the requirements for the qualification and grades of the platinum. In this action, we call it a delivery. Then I want to talk about the function and responsibility of the futures exchange. There will be 2 parts. First of all, to discover the most effective pricing. This means, and the futures exchange is able to find an open and transparent forward price. So there are many kinds of products and many kinds of transactions in the futures exchange. If it is a transaction for the spot products, namely the upper stream sell products to the lower stream, traders sell to the lower stream. So all these is a spot market transaction. But if it's a futures transaction, then other players can join in, like the securities, financial institutions, or even individual investors. Even they are not involved in the industry, they can still engage in the futures exchange. While they do the transaction, they can reflect their understanding, their own information about the futures price into this transaction field. So in other words, the futures exchange is a convergence of all kinds of information, not only from the industry, but also from the financial world or even the general public. And futures exchange as an intermediary can do the matchmaking, can pair up the transaction, and can also converge the most clear and most open price indicators and signals. As we can see, the platinum 2307 is reflect the price forecast in the future, namely in July. And the spot price reflect the past information. The futures price is a convergence of the present price and the past and the future price. So that is a more predictive, and it's very useful for the producers or the industrial companies, because they can take actions and avoid risks or trying to gain profits from their understanding of the market and the future. And the second biggest function of the futures exchange is to manage the risk of price fluctuation. And if you look at the chart here, and the spot price and forward price generally would converge at the delivery month, but before the delivery month, there will be and it will diverge. So when people short the contract, then the spot price will drop, and it will converge with the forward price as a delivery month. So with this mechanism, people can do the hedging, or can gain profits from these actions. For example, in the futures market, the producer can lock in their profit that is only possible to be materialized if it's in the spot market in a 6-month time. In other words, the producer can lock in the low cost earlier, 6 months earlier in the futures market, and our investors and traders can also choose their position, if it's long or short, based on their understanding of the market. So in 2008, the futures and derivative transaction law was effected, and that was also the highest level regulation and law in terms of the future and the derivatives. Based on this legal document, it stated that and the central government support the development of a futures market and would let it to play its role in the fighting the effective price, manage risks, and so on and so forth. Since, as I mentioned, the price of the spot market and the forward market would converge, and so the traders is able to make transactions in both market and hedge against the risk. We can use the gain from the one market to make up for the loss from the other market. So this overall action, we call it a hedge. And the effect of the hedge should be evaluated based on the transaction in the spot market. In the future, we will set up a platinum and a palladium and futures department. The overall profit should take into consideration of the profit and loss in both the spot market and the futures market. If you only look at one market, it is not enough to look at your overall position. So I will give you a more specific case. For example, in April 2023, a car catalyst company signed a contract with a palladium company to procure 100 kg of palladium on August. So now the spot market price is 370 RMB per gram, but the catalyst company is afraid that the price will go up in the meantime before August. So what he should do is to long the contract, long the 2708 palladium contract. Then when the delivery month came, which is also corresponding to the spot contract he signed with the palladium company, and the spot price has already gone up 20 RMB per gram. So in the spot market, you need to suffer a loss, but since he already hedged it in the futures market to the delivery month, the price will converge, as I mentioned. So in the futures market, he got the profit of 20 RMB per gram, and in the spot market, there is a loss of 20 RMB per gram. So, and the position is offset. So the cost will be locked in at 370 RMB per gram. This is a classic case of hedging. Okay, I talked about the concept of futures, how it works, the functions of the futures market, and how can a company hedge in the futures market to lock in the cost, to lock in the profit. In the second part, I want to talk about our draft of platinum and palladium futures contract. So in the case I gave you, I mentioned that the futures is a standardized contract.
So the terms of the contract are formulated by our exchange. In addition to the price of the futures, we need to understand the terms and the content of the terms as well, because the terms of the contract make the prices meaningful. For example, 2308, in the example I gave regarding the palladium contract, the price of the contract is 380 RMB per gram, but that's not enough because you only see delivery will happen in August. In addition to that, you need other information like at what value you are going to deliver and in what form do you need to deliver powder or do you need to deliver ingot. All these information must be laid out in the contract designed by the exchange, so that all the participants in the futures exchange will have clear idea about what kind of things they need to deliver in the future, at what value, in the what format, and at what type of quality. even if they don't do delivery, they need to at least understand what the specification of the contract indicate. So I'm going to walk you through the contract. First, the format of the deliverables. As you know that palladium and platinum have two mainstream forms, sponge and ingot. In most internationally recognized exchanges, only ingot is allowed. However, in our exchange, we allow for the delivery of both ingot and sponge. We did some analysis of data, and according to our analysis, about 20% of platinum exists in sponge. For palladium, about 70% and above of palladium exist in the format of sponge. So by incorporating sponge format delivery, we make sure that futures can play a bigger role in serving the real economy and enterprises in need. So that's about the delivery format. In terms of the quality, firstly, purity should be no lower than 99.95%, and microelements must meet China national standards depending on the formats. Say if you want to deliver sponge, platinum, or palladium, you must meet the China national standard requirement concerning sponge. And if you want to deliver ingot, then you must meet the ingot related requirements. And in addition to that, if you deliver sponge, then there are additional requirements about the burning loss, no more than 0.1%. As for the delivery unit, one lot will be 1 kilogram or 1,000 grams according to the average price in 2023. About one lot of palladium and platinum are 387,500 RMB and 234,000 RMB respectively, and margin-wise, we are at the in the mid to a high range because PGMs are precious metals, so the products themselves are rather high. As for the minimum tick, 0.01 RMB per gram, and contract months January to December, because most of the downstream consumption of PGM is in the manufacturing sector, which represents steady demand, which is different from agricultural products that are very fluctuating depending on the months. So we have specified the delivery months from January all the way to December so that companies can find appropriate months for them to do arbitrage, also send a rather stable price signals to the market. As for the delivery months, as you can see, the 10th, the delivery day, and the last trading day, the 10th and 13th trading day, will be the delivery day, which is similar to other exchanges. As for delivery method, we have the physical delivery. There are two ways of delivery in the futures market: physical delivery and cash delivery. Cash delivery meaning the liquidation of the positions with cash. However, in China, only physical delivery is allowed because for physical delivery, it has a very strong format of convergence for futures and spot markets. So we adopt the mainstream method of delivery, which is physical delivery. And there are two ways of delivery. One is delivery at warehouse, and the other is delivery at the warehouse of the factory. Warehouse means the delivery happens at the registered warehouses with exchanges, whereas the factory warehouse delivery means that you can deliver at the warehouse of factories. Say that you have registered with the Guangzhou Futures Exchange as a factory warehouse, then the buyers can directly claim the goods at the warehouse of the factory, which increases flexibility because the buyers can negotiate with the factory about what type of products they want. So they want ingot or powder, which adds additional flexibility. And also brand management is another concern. In addition to the quality specifications, brand is also a must. Only brands recognized by our exchange can be delivered. As for the delivery unit, 6 kilograms, usually we consider the fact that most of the internationally liquid ingots are more around 6 gram. As for the shortage and excess, depending on the format of the deliverables, for ingot, shortage and excess should be no more than 10%, and the weight of each ingot should be no less than 500 grams. As for sponge, the excess or shortage should be no more than 0.1%, and 1 bottle of sponge should be no less than 1 kilogram. As for the daily price limit and margin, 4% and 5% respectively, which is the minimum or the lowest level. Actually, we may decide to increase the numbers, or we may decide to change the number depending on the market situation. But we think that 4% of daily price limit range is enough to cover most of the fluctuations of futures. As for the position limit, the closer you are to the delivery months, the smaller the range. Usually 1,000 lots will be the limit. If you exceed 10,000 lots on single side, we will do position limit. In other words, if you have 20,000 lots, then we impose a 10% limit. In other words, per person wise, you have no more than 2,000 lots. And if it's less than 10,000 months, but if it's closer to the delivery months, then we narrow the number to 300 lots. And if it's closer to the delivery day, the number will go further down to 100 lots. So this basically is an overview of the draft of the contracts. I've walked you through most of the terms there. Next up, we will further do investigations, and we will expand the scope of our investigation, and we will increase the depth of our investigation, and we will solicit opinions from our clients to optimize the contract. Of course, I've only given you an introduction of the draft of the contract because we're early in the investigatory stage, and I'm only giving you the draft version, but we would very much like to hear your comments and suggestions as well as feedback. We will do revisions to this contract depending on your feedback. And lastly, I wish you can continue to support our work so that we get the listing of platinum and palladium contracts into the market as early as possible. Thank you very much. So much from me.